Fund Supermart, your online gateway to unit trusts.
Hi, Steve.
Hi.
Why should investors consider investing in US real estate securities?
We think it's one of the best ways to gain exposure to the commercial real estate market in the U.S. The securities own, or the real estate investment trusts in the U.S. own some of the highest quality real estate, and you also have the obvious benefit of liquidity in the public market.
What is the 2015 outlook for the US REIT market? What do you think will be the key performance drivers?
Our outlook is positive for 2015. We think that the main driver is going to be real estate fundamentals. And when we're on the ground looking at real estate, we see that supply and demand are in balance. And we think that the improving economy will continue to be a driver for demand for commercial real estate. And there's very little new supply in the market, and so that should be a good backdrop for the market, for the real estate market.
With FTSE, NAREIT, or Equity REIT Index delivering more than 25% in 2014, what do you think about valuations? Is it still a good time to invest in this sector now?
We think it is still a good time to invest. When we look at the valuations, we think many of the companies, or broadly the market, is fairly valued. What drove much of that performance had been somewhat of a recovery from a weaker performing period in 2013, but we've seen strong cash flow growth. We've seen property values continue to go higher, and so that's been supportive of valuations.
Which real estate sectors do you see opportunities? Any particular sector that you're cautious on?
Sure. Currently, we think that there's good opportunities in the regional mall space and in the office space. Those are two sectors where we think valuations are attractive, where we see the potential for above average cash flow growth, and where fundamentals on the ground continue to show improvement. In terms of areas that we think that could be somewhat of a concern, is looking at the more defensive sectors. So we're currently underweight the healthcare sector as well as the net lease sector. And that's primarily because of the long-term nature of their leases, and the ability, we think, will be less than below average growth out of those types of securities.
What are the potential risks we could face going forward for 2015, and how is your strategy positioned to mitigate against the risks?
Sure. I think one of the key risks that we see in the real estate market, and similar that we've seen across the capital markets, has been the interest rate environment in the U.S. And globally. Investors have looked at the space because of attractive dividend yields relative to low interest levels that we're seeing in their fixed income. And so that could be somewhat of a headwind if we see a sharp increase in rates over a short period of time. That could be a headwind for our space. But we think over a longer term period that improving fundamentals in real estate will be supportive of the stock. And so we're less concerned with that short term headwind, because as long as higher interest rates are being driven by an improving economy, stronger GDP growth, improvement in the job market, those are the key drivers for demand in commercial real estate.